how to use support and resistance to now analyze the market, how to trade during the bullish market when the price is going up, and also how to trade when the price is falling. There is a simple formula we always use, which is called loaded Forex strategy blueprint. All you need to succeed in the financial market is this simple blueprint I want to share with you guys. Loaded Forex strategy blueprint. Under this loaded Forex strategy blueprint, the first one is what we call trend, or you can call it direction. You have to understand the trend. Then the next one is to mark your support or resistance. It depends. If the price is trending up, buyers are the one dominating, you have business with support. But if the price is selling, sellers are the one dominating, that means you have business with resistance. Then the last one is your entry criteria, right? So we're going to treat this blueprint one after the other. If you come to the market, the first question you want to ask yourself, whatever pair you want to trade, either USDJPY, GBPUSD, or gold, or NAS 100, or Bitcoin, whatever, the first thing you must figure out is what we call trend. These are the two time frames that you need as a day trader. Let me include this day trading style. As a day trader, these are the two time frames you need: daily time frame, then the 30-minute time frame. Then what are the analysis you need to carry out on the daily time frame? Number one, figure out your trend on the daily time frame. Then mark your key level on the daily time frame. If I say key level, also means your support or resistance depending on the trend of the market. While on 30-minute time frame is your entry time frame. This is a time frame you use for your entry. This is where you execute. You don't execute on the daily time frame, you only execute on the entry time frame. Your job on the daily time frame is to establish the trend, then mark your key level, either support or resistance. Let's go back to our loaded Forex strategy blueprint. The first one is the trend. As you all know, there are two types of trend, two major one. The first one is what? A bullish trend, when the price is giving us low, higher high, higher low, higher high, higher low, higher high. Then downtrend, when the price is giving us from this high, lower low, lower high, lower low, lower high, then lower low, right? If the price is trending up, you need support. Just be buying at the support level. But if the price is trending down, you need resistance. You only have business with the resistance. That means you should be selling during bearish market condition. This is a good example of bearish market trend, right? Number one problem we want to solve is the trend on the daily time frame. Your duty is to come to the daily time frame, then come to daily time frame. You click on it to take you to daily time frame price action. On the daily time frame, what is the trend? Price action is bearish. The market is downtrend. Price started from this high to give us a new low, lower high, lower low, lower high, then lower low. The first problem has been solved. What is the trend on the daily time frame? We are in a bearish market trend. And during bearish market trend, your duty is to look for sell setup. Just be selling. You don't have any business with buy setup or with buyers in the market. Sellers are the one dominating the market. Then the next one is to now mark your key level. If the price is trending down, that means your key level will be resistance. So the question is, where is the recent zone that you will mark as your resistance? You can see the price action gave us low, lower high, lower low, lower high, lower low. And where is the last key level or resistance that the price invalidated? Price gave us a low here, lower high here, lower low, lower high. Then now price expanded to the downside. This place was acting as the last zone that pushes the price to the upper side. So then price now invalidated it to the downside here. This is acting as our resistance zone. The next one is to now extend this your key zone to the historical data. You want to confirm or check how valid it is. And for you to confirm how strong this resistance is, you have to check how many times price reacted around this zone. You need a minimum of 30 times. You can see price reacted at this resistance here around 2024. Price reacted again, price reacted here, price reacted here, price reacted it again. So price sold down to the downside. So if price is coming back again, you should be expecting a reaction. And the rule says sell at resistance. So we are expecting this price action to do what? To give us a retracement back to this resistance. Let's pay attention to the candlestick. Now the price is buying, price created a new support zone. From this support zone, price bought. It pushes the price action to this resistance zone here. This resistance will be our point of interest. Our POI, point of interest, means the zone where you want to take opportunity. At this resistance zone, now we have solved problem one, the direction and our key levels. Since we are selling, we are using resistance because the price action is downtrend. We are in a bearish market trend. The last one is entry. And what is the time frame we use for our entry? Number one, 30-minute time frame. Simple as ABC. After analyzing or establishing the trend or direction on daily time frame, you scale down to 30-minute time frame. On the 30-minute time frame, what you need is to draw what we call counter trend line by coming to the left section 2, come to this point here, click on the down arrow to bring out the list of the tools. Then you click on trend line. You connect your trend line from one point to another. You can see I'm starting from this point here. From the wick of these candlesticks here, from this point here to this point, I'm connecting it from this wick here to the next zone. These are another point that I can connect together, right? What is the purpose of this counter trend line? Is to guide me from executing blindly. I will only execute this price, or I will only sell if the price action close below this counter trend line. The first candlestick to break this counter trend line to the downside will be my entry. Let's play the candlestick and see the candle that will break it. If the price action or if the candlestick did not close below this counter trend line that I just draw on the chart right now, I will not execute. I have to exercise a lot of patience until the price close below it. And you can see the first candlestick that closed, which is a bearish candlestick. Look at the candlestick that closed below here. Simple as ABC. This candlestick intersected or invalidated this counter trend line. Like I said, the first candlestick to close below this counter trend line will be my entry. Then I will come to this left section to click here and select my short position. Short position is a tool you use to take sell opportunity when the price action is trending to the downside. I will use my sell position here. Then I'm going to place my stop loss above the resistance here. Then I'm going to target the next zone, ratio 1:2. As a day trader, I don't want to target more than ratio 1:2 around this zone. Let's play the candlestick and see what the price will offer us on this trade. You can see the price is moving towards our TP level. Finally, the price smashed our take profit level. This blue zone is our take profit, while this red zone is our stop loss zone. If price action is retracing inside this red zone, is a sign that you are losing money. If price action is selling down or is inside this blue zone, is a sign that you are making money in the market since you are shorting. Let me show you a bullish example when the price is buying during a bullish market trend. If you look at the chart right now, price is trending up. Buyers are the one in charge of the market because price created a low here, give us high, higher low, expanded to give us a new higher high, then a retracement to give us a new higher low, higher high, higher low, higher high. This place is known as support zone during the bullish market, while this place is known as resistance zone during the bullish market. These are resistance zone, right? Using our loaded forex strategy blueprint, the first problem we want to solve on the daily time frame. As a day trader using day trading style, your number one time frame is daily time frame. And what are you solving on daily time frame? Number one, the trend. Then you mark your key level. Key level is also known as support and resistance. Since the price action is trending up, our key level is going to be support. Support is going to serve as our point of interest. That is area where we want to take execution, where we want to execute our buy orders. Looking at this price action right now, the trend is bullish. We have been able to solve number one. And if the price is bullish, that means we want to be looking for buy opportunity. So the second step we want to follow is to mark our support. Since the price is bullish, we'll be using support key zone. If you look at the price action right here, price gave us a resistance zone here. Let me take the candlestick back so that we can understand. Price gave us a clear resistance zone around this place, while price gave us a smooth support zone. This place serves as our recent higher low, while this place is our recent higher high. Why? Because it invalidated the last higher high around the zone. Let's play the candlestick. The price action invalidated this resistance there to the upper side. It was serving as resistance around the zone before the price invalidated it. If you extend the resistance to the future, now that the price invalidated it to the upper side, is no longer resistance anymore. You will call it support, because price already closed above it. Around this resistance there, price sold down. Then from this support, price bought and invalidated this resistance. So after the invalidation, this is now a broken resistance. Then it is now support. So this piece is going to be your point of interest. That is area where you want to look for buy opportunity. Your next job right now is to now wait for price to come back to this support zone. After this expansion, then the next phase is going to be a retracement phase or a pullback phase. Wait for price to give us a pullback phase to this zone here, serving as support. Then you now take a buy opportunity. Let's play the candlestick. Look at what happened. Then the price finally retraced to give us a pullback here. Then we are done with our analysis on the daily time frame. The next one is our what? Entry, which is the third step in our loaded forex strategy blueprint. And what is the time frame we use for entry? It is 30-minute time frame. Use your counter trend line tool. You come to this zone by connecting the point together. So what are you telling the market? I want the price action to break this counter trend line. The first candlestick that will close above this counter trend line here will be my entry. So let's play the candlestick and see if the price will close above it. Now price came back here. Let's see. Boom. You can see the candlestick that closed above it here. This was the candlestick that closed above this counter trend line. That is will be our entry confirmation. Then we're going to place our stop loss below here. Then we're going to target from here to this zone as our take profit. It depends on the the amount of profit you are looking for. You can target ratio 1-to-1 target, or ratio 1-to-1.5, or ratio 1-to-1.2, or you want to target the next resistance zone. Let's play the candlesticks. Now price is inside our take profit zone, which is the blue zone. Whenever price is going up like this, since you are taking a buy order, you'll be seeing profit. That means you are making money. But if price action retrace back inside this red zone, which is our stop loss zone, that means you are losing money. So let's keep on playing. Now you can see the price action is already going, coming down again. Now let's see. Price is approaching our take profit level. Boom, price smash our TP level zone. All right, if this video has blessed you in one way or the other, please, we would truly appreciate your support. And the best way to do that is by liking this video, by clicking on the subscribe button turn on the notification bell so that YouTube can keep recommending our videos to more forex traders, people that are ready and willing to learn how to trade profitably in this year 2026. And I will see you next time.